Listen up. Playing it safe with your money right now feels like a trap, doesn't it? You want returns that actually matter, not these laughable yields that barely cover inflation. You're tired of watching your portfolio crawl while others take risks and make real moves. But chasing the big wins feels like a roller coaster designed to break you, shakes your confidence, makes you question if you even know what you're doing. That tension, that gnawing feeling that you're stuck between losing money by playing too safe or going crazy chasing dreams that crash hard, it's real. Everyone says high-yield bonds are too risky, better to stick to AAA stuff. But the frustration is that those safe havens don't protect you anymore. Low rates, stretched valuations, uncertainty everywhere. So what now? Sit back, watch the system grind you down, or figure out a way to work the game smarter. Here's the brutal truth. High-yield bonds aren't just dangerous junk anymore if you know how to play them the right way. This isn't about throwing darts blindfolded, hoping to hit something. It's about digging deeper, finding the hidden safest pockets in the riskiest waters. You must stop thinking high yield equals gambling. Instead, start seeing it as a place where calculated risk meets opportunity if you know the triggers and who's behind the deal. Not all below investment grade bonds are created equal. You've got to get ruthless with your research. Look beyond credit ratings and glossy reports. Get inside the company's cash flow, debt maturity schedule, management credibility, not some surface level overview, but real financial skeletons. And then build your kill switch. Set strict exit rules before you put a dime in. Know when to get out, because the second you get greedy, the setup turns on you. This is survival and profit hunting, not a fantasy game. But here's where most miss it. They ignore the macro picture. High-yield bonds can become a de facto safe haven for risk takers when the market chaos hits extreme fear and the yield spreads spike. These moments are gold mines if you catch them before the crowd flips. You want to move in while others are running for the hills, buying at discounts no one else dares touch. Understand the cyclical nature of credit markets better than your peers. When spreads widen dramatically, that's your invitation to dig for alpha while others panic. It's about timing, precision, and nerves steel strong enough to ignore the noise. If you can't stomach short-term volatility, you will never get the long game payoff here. Forget mainstream advice about sticking only to investment-grade safe bonds that leave your portfolio gasping for air. Stop letting fear slow you down. Instead, sharpen your focus on bonds that pay sustainably high coupons with underlying business resilience. Industries that don't crumble overnight, companies with cash flow you can almost set your watch to. Don't let ratings agencies tell you what's safe or not. They're late to the party, reactive, and sometimes dead wrong. Your edge is knowing who's stable before the street does. Nail that, and you turn high yield from a gamble into a strategic weapon. But here's what separates real pros from wannabe investors. Diversification is not just spreading risk. It's about layering your exposures smart across sectors and maturities. Never dump your money blindly into a single issuer or industry. Use high-yield bonds as part of an intricate income generation and risk calibration approach. Play with staggered maturities, mix bonds with different covenant agreements, and always be ready to pivot fast when market signals flip. This isn't a buy-and-forget game. This is active hunting, minute-by-minute awareness, and ruthless reallocation. If you don't build your discipline muscle here, you're just running towards ruin. Remember, the people who win in this game aren't the passive bystanders waiting for a safe bubble to inflate. They're the ones who understand that risk and safety aren't opposites. They're twins that you control by being smarter, faster, better. So, get obsessed with data you won't hear on CNBC, challenge the received wisdom on what's safe, double down on your due diligence, set your kill switches, and be ready to strike when the bonds market trembles. That's how high-yield bonds become your new home base, not some reckless gamble, but a calculated safe haven for the real risk takers. Time to stop whining about the system holding you back and take control. This is where the real players move. Will you be one of them or just watch from the sidelines? Subscribe to our YouTube channel and open the featured link to learn more.